Good evening, my listening friends, and once again, it's the DeFi Collective with Robert Vaughn and your other host, Alex Jewell,
Nope.
also known as DeFi Alex, and it's a street name, DeFi Alex. But we're here to talk about what else but decentralized finance, economics. A lot has been going on. If you've been locked up in jail or under a rock, you probably heard about some of the stuff that's been happening in the financial markets because there's been so much of it. And here at the DeFi Collective, our email is show at the DeFiCollective.com, and you can find us on YouTube at the DeFi Collective. We cover subjects that we have requests for, and we've got so many requests. What's going on with Coinbase? What is Bill Gates talking about? Why is he buying farmland? Why did the Dow? Why is the Dow? Down 7,000 points in the last 6 months. What should I do? Should I buy, sell, hold? We're not financial advisors and we don't give advice, but we can help you maybe avoid some pitfalls. And I just want to just kick it off. Talking about Coinbase. Coinbase in November had an IPO a price of $350. It closed today at $55. So it's down about 7 times of what it was worth before. When it was at $350, the CEO bought a $110 million house, which would have a value today in the stock of $700 million. So the stock went down. So the price that he paid for it is 6 times the value of what it was at the time that he bought it. And in addition to that, he laid off 18% of his workforce, and he told people that if they don't want to work there, they could go pound salt, which doesn't exactly endear you to your workforce. And I think what a lot of people are going to realize is that you're only as good as your staff. and if they respect you and if they believe in their mission, they're going to work for you even when you're not watching them.
Yeah.
And that's the key to being successful. And we there was a 75 basis point increase in the interest rate to slow down inflation, and it probably will help slow down inflation. But inflation is caused by major companies taking ridiculous profits. Oil company profits are up 5 billion over what they were last quarter. And people take profits, and when they raise prices, that's what caused inflation.
Yeah.
Biden doesn't cause inflation. Trump didn't cause inflation. Obama didn't cause inflation. The president has very little to do with inflation.
Yeah.
He, through the Fed, can maybe try to adjust the monetary policy to maybe curb inflation.
Which isn't really happening.
Yeah, which isn't really happening, and people say, well, why doesn't Biden do something about it? Well, he can't do anything about it unless he's got $1 trillion sitting around somewhere. When OPEC decides they want to cut production, and Putin started a war and cut production also, and Iran, which is another country we haven't really been friendly with, they cut production also.
Sri Lanka has ships waiting, just you could see them from shore with everything they need that refuse to come in because of profits, right?
Yeah, that's right. So did Nigeria, so did Venezuela. So, we at one time the United States was the big bad wolf. But we have a lot of oil, but we don't have enough to really offset the price of oil and price of gas. And that's what's really driving inflation.
Right.
Because oil drives everything. So, Alex, take it away, man. I don't know where to start. There's been a whole lot going on. Yeah.
To understand, this is really recent news with, the Fed raising interest rates. This is sort of,
this happened today, right?
Yeah. Like literally a few hours ago when this news came out. 75 bips, it's, 3/4 a percentage point. It sounds like a small amount, but it's actually very dramatic. We haven't done that since the 90s. But the reality is that the issue, like you mentioned, is really corporate greed, and you raising interest rates temporarily may hold it off. But if you're not adjusting the fundamental issues, right? You're not fixing the underlying problems, which are corporate greed, and you're not regulating those markets so that corporations can't do that. It's a band-aid, right? It's sort of like putting duct tape on a pipe and you're like, but the
long,
pipe still has, they're still pouring money through the pipe and you're like, well, we'll just, we'll just do what we can to like piece this together right now. So essentially what they did is they put off a recession until, I don't know, mid 2023, so you didn't like prevent inflation, right? You didn't help design an economy or fix our economy so that it doesn't have a recession soon because it's unsustainable the way that it's designed. You've just offset when that recession comes. And then maybe later on, to fight off that impending recession, you do this again, right? But the reality is that we need a new system. We need at least fixes to the system. And, this is a bit of a Band-Aid. So it's a bit of a good Band-Aid if you care about temporary gains. We saw an immediate response in the market. We saw an immediate response even in crypto, because ultimately, and I think we'll get to this, is that, the way that crypto is priced in the traditional market, right, in terms of US dollars, is very much correlated with that market, right? It's very much correlated with how all commodities and all securities are priced in that market. You pair this, you pair these graphs, especially Bitcoin and Ethereum, you pair that with, S&P 500 and Dow, and the graph is very similar. Why? Because if you're measuring the flow of US dollars into things and out of things, and you're measuring how people are storing those dollars in it, then those are ultimately a lot of the same dollars. But at the end of the day, these price fluctuations and volatility here is not, for the most part, it's not a reflection of crypto's viability itself. It's not a reflection of crypto's economic stability itself. In fact, the goal is that at some point, once we trim the fat of things that aren't designed well that we're seeing right now, that it'll pull away and become a really good hedge against what's happening in traditional market. Now, what we have seen is that in not so good times of the traditional market, some crypto things weren't designed well. They were designed only for when money goes up, and when money stopped going up, they all of a sudden were insolvent. They all of a sudden had issues. They weren't prepared. They didn't have a war chest ready.
There was no regulation.
Right. There's no regulation forcing them to have the right balance of assets to deal with this. Right. And so all of a sudden you've had a similar situation to the .com boom, right? Where you had a lot of money pouring into things that weren't ready to deal with the fact that it couldn't happen that way forever. And when it stopped happening that way forever, well, the things that had fundamentals, that had been designed well, that had a well-structured company, that weren't wasting money frivolously, that weren't, taking money out frivolously, they weren't trying to get rich quick. Those companies that had fundamentals, they're still here, right? They're still the internet that we have. Obviously, something really important came out of the .com boom. But what we learned dramatically from the .com boom is that you can't just have a bunch of hype with it forever also. And at some point, that unsustainable hype, the things that aren't valuable, that don't actually have fundamentals, those things will freeze and disappear. And unfortunately, a lot of people get hurt in the process, right? That's the story of emerging technology. And so that's what
a lot of scammers, just like with the .com boom, you had a lot of scammers. I mean, everybody and their mother was having an internet company. Well, my internet company does this. I remember one in particular was a gentleman who had pioneered buying automobiles over the internet. And he pretty much kind of developed the model, and it was a very successful company. It was Auto by Tel. And their stock came out, and I mean, it just went through the roof. Everybody was like, here, take my money, please take my money. Well, after the hype, they figured that a lot of other companies could do exactly what they were doing, and there was nothing really unique about the model. You'd order a car through the internet, and they would deliver it to you, kind of like Carvana's doing today. And so usually a lot of times the first person that does something usually fails, and it's usually the second guy that comes in and say, well, I see where they made mistakes. But I'm saying this is very similar to the dot-com boom. And I would imagine that Disney kind of watched Netflix and said, okay, we kind of see where they screwed up. Well, first of all, they're letting everybody share their logins with everybody else. That's revenue. Second of all, regardless of what you might feel about Dave Chappelle, a lot of people are offended by trans jokes, and I'm not saying one way or another, but a lot of people, there's a business cost to that,
Right.
They had taken the model that Blockbuster had and improved upon it, but they didn't really keep going with it. And I think
Ended
that's
up
why
in
they had
$15 billion of debt, right?
Yeah,
And they
yeah.
had, when you end up with $15 billion of debt, instead of perhaps doing, I don't know, stock buybacks to line your own investors' pockets, pouring that into original content. Why? Because when they got it, they had the comfort of having everybody else's content, right? They had a lot of exclusive deals with people like Disney and Marvel, and like you had all of these corporate deals. They had all the TV shows and movies that they didn't have to create themselves. And they did have a couple successful original content pieces, obviously. Like Breaking Bad, for example, was originally AMC, but then, they ended up with it. You had Narcos, so they've had these shows that did really well. But then what happened? Well, they stopped investing in original content for quality, and they started doing it cheaply for quantity. So you saw like a large influx of nonsensical content, and they were leaning on the fact that they had other people's content that they had exclusive rights to. And then all of those other corporations that they had exclusive rights with, those contracts ended, and all of a sudden they released their own platforms. So now you had Paramount Plus, you had HBO Max, you had Disney Plus, you have Amazon Prime, you have all these other companies that have much larger revenue streams from all sorts of other things. And all of a sudden, what do you have? Netflix's only revenue stream is if you care about what's on their platform, right? They don't have another revenue stream to fall back on. What they do have is $15 billion of debt they don't want to default on. So this is a serious issue.
and somebody's going to come for them pretty soon.
Right.
Somebody's going to try to buy them out pretty soon, because with, if you can't, $15 billion in debt, I'm not sure what the interest rate is, but that's some serious money.
It's not going to work forever.
Yeah, it's not going to work forever. Yeah.
They're
not going to refinance that. Not going to refinance that too many times, especially when you lose. And they lost, I don't know how many subscribers.
200,000. They lost 200,000 subscribers last quarter. They're predicting another $2 million this quarter, or 2 million subscribers. So that's going to be 2.2 million subscribers lost. So when you're already not in the green, right? When you're already $15 billion in the hole and you lose 2.2 million people just in 2 quarters,
you're not going to make that up. Yeah, you're not going to make that up. Yeah.
Right.
So eventually somebody will come for them, probably be Disney. They'll let them keep the name and supply them with more content, probably. I just don't see them climbing out of that hole. And that was a great stock, 6 months ago.
Well, that's how quickly this market. When you look at this market, and that's how quickly these things change, right? And that's why when we look at crypto, we have to look at the holistic picture of the market overall, because if you care about the U.S. dollar value of things, you have to care about how money's moving in kind of an interesting time, a very interesting time. For the dollar and for securities and for companies. A lot of other companies are struggling too, because we have chip shortages. Like you mentioned, we have major supply chain issues. We have major chip shortages. You have car companies that can't sell cars
because they don't have chips, which
don't have the cars.
Intel will build a plant that's ready in 3 years. And
right.
But I think this is one of the I don't know how I would call it, but one of the problems with capitalism is that you're always looking for short-term gain.
Yep.
And the reason China, 40 years ago, after World War II, Russia and China were the poorest countries on earth.
Yeah.
And look at them now, man. But
The
they,
latest projections show by the 2030s,
oh yeah,
we're going to be second or third
oh
economically in the
yeah,
world, which
yeah.
is
Our gross domestic product, which is the total values of goods and services, I think it's 22 trillion. China was 10 trillion about 8 years ago. Now they're at 16 trillion. So
yeah.
so they're moving on us, and what's so crazy about it is we took all our production and moved it to China.
Well, our tech, when we talk about a data standardized economy too,
Mm-hmm.
look at who owns our tech. You got TikTok that's growing faster than any of our
Mm-hmm.
American tech companies.
That's
It's
right.
more
That's right.
users than anything else.
Mm-hmm.
You've got even things like Discord. You've got Discord, Twitch, and TikTok are predominantly owned by at least
Yeah,
majority
yeah,
owned
yeah, yeah.
by companies like Tencent, which are owned by the Chinese government, basically. So you have this direct
Yeah.
control over our data, your face, your fingerprints, if you have like fingerprint phones,
Mm-hmm.
everything about you that you like. They're the smartest algorithm. TikTok has the smartest algorithm on it of
Oh,
any
they
social
do. Yeah.
media
If you want
platform.
in the music business now, if you want to get going in a hurry, man, TikTok is what's up. It used
Yeah,
to be Instagram. TikTok is what's up.
yeah,
If you're looking for
it's
followers, you want to get your
powerful.
music. Yeah, yeah,
But
yeah.
what that means is that it's also powerful in terms of this idea of surveillance capitalism that we talk about,
That's right.
and
That's
who
right.
controls the narrative or who controls what your decisions are, or even, um, even if they want to like undermine elections, undermine education level, undermine like what your access to information. If China does kind of feel that they're at war culturally or digitally with the world, and it's their plan to take over the world, quite literally, is something that they talk about. Um, it's not going to be a ton of planes and ships and
No,
bombs,
man.
right?
No,
It's
no.
it's our production and it's our technology and it's the new data economy that they
And
can
what have we been
centralize
doing
and
for the
control.
past 20 years? How many trillions of dollars have we thrown away in Afghanistan, you know, in Iraq for stupid stuff that
And
they
they were
say
pouring
they
that
got
into
they got
technology
they got
development.
bombs. They don't, they got yellow cake uranium, and all kind of bullshit. Excuse my French, but all kind of BS, and they're spending those trillions of dollars on infrastructure.
Infrastructure and
China
tech.
now build cities before they actually populate them.
Yeah.
They'll have a city built for 8 million people, streets planned out, schools, grocery stores, everything before the people even move in. And the reason they do that is so they can put surveillance in the cities. In China, you get a social credit score that determines, where your kids can go to school, what kind of government job you can get, and it's based on how friendly you are to the communist government. And whether you're a good citizen, do you jaywalk, they watch you 24/7.
Yeah.
When they have locked down a city for COVID, they had this one apartment complex where they welded the door shut. The
Yeah.
entrance. They said, you guys are in here. And if they, when they were testing people, it wasn't optional for you to get tested. They will come in and get you. And if you have COVID, they take you away. They say, okay, we want you to go here.
They didn't stop production though.
They
They
didn't
had
stop
people
production. That's
sleeping at
right.
the factories. You
That's
suddenly
right.
lived at the factory.
That's right. Well,
And
they
I don't know if you
did.
saw
That's right.
videos.
They did lock down a couple factories and kept the people there so
One
they
of
couldn't
some
get
of them were
COVID. Yeah.
Apple's. They were Apple's factories, and this is why Apple's
Oh,
having
okay.
supply chain issues because the workers rioted and were trying to leave. And so there's this video footage of workers running through the turnstiles and through and trying to leave, and it created a huge issue for Apple because Apple had no issue with these
Mm-hmm.
conditions, and they were ready to have all this produced
Yeah,
in
yeah.
time for their yearly release of the next iPhone that's just like the last iPhone. And so now they have an issue. They're like, well, I guess the iPhone 14 is going to be pretty much the same as the iPhone 13 Pro Max. Like,
Yeah, yeah, yeah. Kind of crazy, man. Yeah, but we're behind we're way behind the ball on technology. I mean, we're busy, building freaking aircraft carriers that you could take out with one missile. Everybody's got the technology to take out an aircraft carrier with a submarine or with a missile, a hypersonic missile or something. And it costs billions of dollars, which is like totally a waste of money, man.
Yeah.
This war is going to be a cyber war, man. Because if you can't communicate with your troops, if you can't, if your drones can't operate the way they're supposed to, and somebody else can take over your drones and send them back at you. I mean, it's going to be a cyber war. It's going to be a war of information.
Yeah.
And I think the countries who are best positioned to take advantage of that, and not saying you would have to even do that, because one of the things about surveillance capitalism is that you don't have to steal money from people. They'll actually bring it to you and tell you thanks here. They'll actually bring you money, votes, and power, and do what you want. You can make them do what you want without forcing them. You don't have to threaten them, and that's what's so insidious about surveillance capitalism. But if you go ask 100 senators, I guarantee you 50 of them won't know what the hell it is. But if you ask any Chinese politician, they'll just get a big smile on their face.
Yeah,
So,
and the issue is, we have a lot of monopolization
mm-hmm.
because we've allowed that to happen through lack of regulation to protect it, or even lack of enforcement of regulation that should have been enforced, right?
Right.
And so what do you have? You have Apple, Amazon, Google, pretty much.
Mm-hmm.
And these companies could be innovating, and a lot of times they might be internally innovating only secretly for their own good, but not for the greater good, right?
No.
What Google does not get you to the best search results for you quicker. What Google does, and what their innovation does, is it gets you to their ads quicker. It gets you to stay on the Google page to look at an ads for longer. 60 or 70% of people don't even leave the Google. You look up something, you don't even leave the Google page. You just get everything you need from there, and Google determines what that is. And so you get hit with a bunch of advertising out of the gate.
Mm-hmm.
Amazon, even if there's better prices through some of their distributors or sellers on the site, if Amazon has it, they're going to show that first. The buy button's right there. You have to get 4 clicks to see if there's a better price.
Right.
So they're not doing things for the better of you or the better of society, or they're not innovating for the greater good. And so this monopolization is a lie. AT&T said this way back in the day when they got regulated.
Yeah, they got broken up. I remember when
they got broken up, and the CEO said this is going to be bad for the people. And it was a lie. It was a blatant lie. They'd already said all this propaganda. If you break us up, it's going to hurt people. They're not going to have as quality a service, and blah, blah, blah. And then clearly that wasn't true. We obviously have ended up back in the same situation. But the reality is that a lot happened in terms of networking and data and communications when we split them up, because you actually created competition. The difference between us and China is China obviously also has a monopolization problem. But what China doesn't have a problem with is funding things for the greater good of what they think as a society is going to propel them forward, which often has to do with collectivism. Say what you will about their efforts to do that, their practices. A lot of them are unethical. But what they're doing
who'd they learn from? Who'd they learn capitalism from?
They ultimately learn quality assurance and capitalism and all those things from the West. But what they've done differently is they've been able to use those in really ingenious ways, whereas we've just used them for a few people to top a centralized wealth and power, right? And
they've made an internal component of the government,
right?
With surveillance at levels that it's crazy. I mean, we have a lot of surveillance here. A lot of people aren't aware of it.
Right, but it's surveillance, it's surveillance almost more nefariously. It's almost
it is. Yeah.
When you hear Snowden talk about it, it's
that's why the law enforcement. That's why a guy can commit a crime in Beloit, Wisconsin, and he drives to Doral, Florida, and they're waiting on him. It's not just your phone. I mean, it's your phone, but it's not just your phone. It's your car. It's your license plate. it's a lot of things. And I was wondering, well, how the hell did they find this guy 2,000 miles away in a storage bin or something, you know?
Yeah.
And he was been surveilled all along the way,
Yeah.
you know. And this is something that happens automatically. There's nobody there watching you, you know, on a camera. But this is something that happens automatically,
Right.
you know. And in New York, I remember one time I had a show in New York for an artist, and I went in this garage in Tribeca, you know, and to park the car. I was going to grab a bite to eat, and I had a bunch of stuff in the car, some recording equipment and some other stuff and luggage, you know. And they asked me a few questions. They said, "Oh yeah, what's in this car?" Because that's, you know, they would thought I might have had a bomb, you know. They said, well, "What's this?" I said, "Well, you know, we're up here from Northeast Ohio. We got to do a show, and blah blah blah. It's this and this." So I opened up, you know, they checked a couple things, you know, looked under the car with the mirror, because they were really, you know, I mean, I was quite surprised. And then a guy came out after about a minute and said, "He's okay." Well, they had run the plate. When I drove in, and he had my own background, he said, "He's okay." They said, "Oh yeah, we know you're a good guy, man." He said, "Go ahead and park." I was like, whoa, you know. But yeah, so surveillance is something that China does it and people know about it, but we do it, people don't know about it. So that's, you know,
Yeah.
that's a difference, you know. But I think as far as you know, decentralized finance, you know, we often talk about, you know, capitalism has had a lot of problems. And one of the biggest problems is you eventually, all the money goes to the top from
Yep.
the middle and the bottom. And that's been facilitated because now, you know, I remember reading George Orwell, 1984, when I was in high school. And we always thought, you know, it would be the government that came after us, you know, but nobody envisioned that the corporations would become the government.
Right.
And you know, in China it's the other way around. The government became the corporations, so
Right.
they're one and the same, you know. And you know, decentralized finance kind of reverses the ownership of a lot of things
Right.
back to people, and out of a central entity.
Yeah.
And I think, you know, for instance, Bill Gates, you know, what was it he did today? What did he say? Something stupid.
Yeah. Bill said that he's not a fan of crypto and NFTs. And of course, he used the Bored Ape example because that's everybody's favorite example.
Yeah.
When they say they don't like a thing, they're like, well, you guys are just trading a bunch of ape pictures, right? And that's you
But
know,
we know.
picking an example isn't an argument against underlying fundamentals of the technology, which Bill Gates should know, because he exists as a person because of the fact that he took a risk with emerging technology. He understood the fundamentals. He stood for it when everybody laughed at him. And that's why he's one of the richest people in the world. So
And we all know, well, I don't know all of us, but we know that he's a major investor in Bitcoin.
well, Microsoft pumps
That's not
out
a secret. That's not a secret. Yeah.
Microsoft pumps out patents, blockchain related patents weekly. I mean, they have entire blockchain departments. Not that he's intimately involved in everything Microsoft does anymore, obviously, but
He knows everything that goes on.
He knows what's going on there. So the reality is, I think this is where we're at, right? And this is even impacting China too. You have a bunch. Capitalism does centralize that wealth and power towards the top, but more than that, the way that they do that is through virtualization of what I like to call fictitious capital. And that's kind of a nod to, you know, some progressive, you know, thinkers.
Is that the rehypothecated treasuries?
Right. Rehypothecated treasuries are a great example of that.
I can have 10 million in gold, but I can loan it out 9 times.
That's a perfect example of fictitious capital. So when you have this virtualization of fictitious capital at the top, and they essentially use this money printer to create things out of debt, right? Debt to one another. And they use that to multiply their gains. All that has to come from somewhere, right? Now we know that no longer comes from anything that's backed one-to-one with anything real, right? It's all sort of made up. Except for the fact that if all of that is made up and it's all standardized essentially by the dollar itself, and everybody else relies on that same dollar, and all those people, every dollar matters, you're directly stealing from the working class in order to be a rich person. And that's really the big issue with wealth inequality in the existing system. And so then, when you have these billionaires who are attacking the new forms of currency, the real question ultimately is, well, why are they bothered by that, right? It's because in the previous industrial revolution, um, labor was the leverage, right? It had nothing to, obviously it wasn't money. Labor didn't have any money. In feudalistic times, labor didn't have any power. There was no democracy, clearly. But what they could leverage was labor. And in this case, in this next one, in the digital industrial revolution, what's known as the fourth industrial revolution, labor will most likely no longer be necessary, right? Things will be automated. Our leverage, though, could be digital. Who owns the algorithms? Who owns the networks? Who owns units of wealth, which are actually our data itself? And so that's where you see issues with, Amazon, for example, with AWS. You see issues with Microsoft, Azure. You see that these companies, more than anything, want to own the real commodities that will standardize next economy. Some of those things are actual tangible things, right? Like Bill Gates buying up all the farmland, BlackRock buying up all the property, right? Yeah. These are tangible things that are never going to go away. We still need to eat. We still need to live in places, right? So if they buy all of that up, that's power. But more than that is they really desperately want to own the entire internet. They want to own all of our networks. They want to own all of our data. And that goes back to some of the surveillance capitalism, but more than that, just owning the units of wealth themselves, the pieces of data. And decentralization is the only way that we can escape that, right? That we can undermine that process and actually have leverage in the next industrial revolution, where we demand against this inflation, both monetarily and greedily, the idea that there isn't as bad as inflation as we're seeing because companies are taking in record profits. Our leverage has to be, we don't need to use your technology anymore. We can create decentralized technology that we own, that we have governance over, that is truly democratized. And that's why they say they don't like it because we own it. Yeah. So,
and their worker co-ops, where the employees actually own the company and share in the profits, it's not a new concept. A lot of them exist, I guess, in Italy and some European countries, Switzerland. And the government actually, when a company is going to close, the government will say, okay, we want you to give the employees a chance to buy the company. And each employee is now a company owner. So this is not a new concept, but it seems to be one that's kind of, I guess, taking hold, so to speak. Because eventually, with the way the system is now, eventually, suppose Bill Gates and Elon Musk and BlackRock say we're going to buy up all the farmland in the world. And you guys can come work on the farm for 2 cents an hour, or you can starve. And we'll feed you and we'll give you a house on a farm.
Yep.
It's sort of going back to feudalism is what it is.
Exactly.
And I think nowadays hopefully people are more sophisticated, that they can maybe not fall for that again, Yeah. But I think a lot of people don't have any choice, because they're trying to raise families, they're trying to pay bills, and they kind of have to do what the company says do to a great extent. And I think that's why you're starting to see so many more entrepreneurs now. I think it's really a good thing, but I notice how many young people now are going into business for themselves.
Yeah.
Whether it be a landscaping business, or I met a girl the other day, 24, she just started a hair salon for kids. She's got 2 of them. Cool. I do kids' hair, and we do their nails for kids, like preteens, and I guess she's got more business than she can handle. So a lot of people are becoming more entrepreneurial because I don't know, getting a job. There used to be good jobs where you could take care of, I think this probably stopped in the 70s, where one guy could work and you could afford a home, you could afford a car, and your wife could stay home and raise the kids properly. Or she could go to work and you could stay home and raise the kids properly. But those kind of jobs are not, there's not many of them anymore. I mean, unless you're, in a high income job, you're an attorney, you're a physician, you're a business owner, then maybe you can afford to do that. But I know I have two or three friends where the guy stays home because the woman makes 3 times the money he does. So,
Yeah.
switch roles. I say, hey, it works for me, But I think, with industrial production is going through a big change.
Mm-hmm.
I think one of the first changes was that we said we can get it done cheaper in China, so we sent everything to China.
Yeah.
That sort of backfired because now China's got everything, plus more. They were 40 years after World War II, well, a little more than 40. After World War II, they were like, China and Russia were like the poorest countries on earth.
Yeah.
And we, we fixed up Japan too, and they beat us in making cars. Still beat us. Camry is the #1 car. They say, well, they make them in.
Although Japan's dollar is about to.
Yeah, they're probably about to go in the tank. But China's coming after them. Yeah, China's coming after them because they won't get in line with
the trend line. Of course, is like how every company, their trend line to be more profitable has to include several factors.
Mm-hmm.
Less work for more output, right? How do you get less work?
Mm-hmm.
Well, you automate things out, but maybe you still need a certain number of workers, but maybe you can pay them less, right? And so the trend line is always, in a capitalistic system, less workers paid less for more output. That's it. Centralize the profits so that you have higher profits, higher returns to stockholders, right? And this has only been exacerbated over time because that is the way the simulation plays out.
Mm-hmm.
So if there's not a lot of options there in terms of like how you fix that, because you're essentially up against companies that are larger than many countries. I mean, they have more political power and pull than
more political
many
power
countries.
than your senator. Yeah.
So what do you do about that? I mean, you have to think differently about what that future looks like. Right. Otherwise, they're going to decide what your future looks like. Mm-hmm. And if they don't need you as a worker anymore, that, like you said, becomes feudalism.
I think you can see evidence of that now, where the statements that Musk made. First he moved from California to Texas because he said California was too woke.
Yep.
So he moved from California to Texas, and then he told Joe Biden, he said something derogatory against Joe Biden, but he made his money because the government loaned him money.
Right.
They gave him subsidies to get the electric car and the SpaceX to use. They gave him the money, and it wasn't a loan; it was a gift. They gave him the money to do SpaceX and
grant. Yeah, these are grants, right?
Grant. Yeah. And so he's made money off of government welfare. And just the other day, he told his people, he said, I want everybody back in the office. Doesn't matter if you can do the job more efficiently, remotely. He said, you can work remote after 40 hours. He said, but if you're not back in the office next week, he said, you don't have a job here anymore.
Right.
And that's not exactly the way. That sounds more like a king, but I guess he learned from his dad. His dad had emerald mines in South Africa.
Yeah.
During apartheid, so I guess he got, that was maybe some background that he got. That's why he didn't talk about him a whole lot. I guess I wouldn't either. But
yeah.
But he makes statements like that. That sounds more like a king than a leader.
Yeah.
And then with Brian at Coinbase. Saying, hey, you know what? So what if I got a $110 million house? Business is bad, but you guys got to go.
We gotta lay off
20%.
And it was these
count
things.
Count by fives. Count by fives. Now all the threes, get out of here.
Right. I mean, how they communicated it too, and it just shows that when companies become a certain size and they have to pay, they have a lot of shareholders, they have a lot of stakeholders that they have to pay attention to more than you as a worker. Mm-hmm. This creates pretty dystopian scenarios, right? Yeah. Especially 10, 15 years, 20 years, 50 years down the road from now.
Mm-hmm.
So no, the good news is, and I think you even hinted at this, is that while things become automated, while a lot of traditional work becomes obsolete realistically over time, um, the ideal is that people can then begin to focus on things that they actually care about and are more passionate about. People can start doing, hey, I've always wanted to do kids' hair. Somebody can open up, they can start doing kids' hair. Somebody's always wanted to be a painter. Somebody's always wanted to make food. People can start doing the things that they're passionate about and that they're good at, that they care about, that makes them happy.
Mm-hmm.
In order for us to allow that to happen, though, so that we aren't ending up in crypto feudal or digital feudalism again,
mm-hmm.
is that we have to create a system where people are fairly compensated for their participation in the system. Mm-hmm. They have to be fairly compensated for what they offer the system in terms of their data, in terms of their participation, in terms of being consumers of the goods and services that make a system run. Right. If you don't do that, if you don't distribute wealth, mm-hmm. Even the people at the top are not going to have wealth anymore to take. And that creates a really bad tension between the rich and the poor, right? It creates a kind of tension that ultimately ends up with the rich getting their heads chopped off, if we're, historically speaking, right? And we've grown past that, hopefully. Like, we've grown past the need of people to rebel and destroy everything in the process. Hopefully we can get ahead of this. And I think decentralized technology is a way for us to democratize that, democratize the technology, democratize our relationship with leadership, where we need
democratize our voting system,
democratize our government itself.
We have the tools, and we've because there's so much money in politics, the guy with the most money calls the shots.
Right, which is not super democratic.
I mean, a senator isn't more powerful,
right,
than Elon Musk or Bill Gates.
Right.
I'm sorry to tell you, but it's not.
Yeah.
And they call the shots, and typically the shots they call are to benefit their own bottom line. And there's like social cost to this, and people don't really. I don't know. I think people are too busy making a living, but this is kind of slid under the radar. That a lot of their decisions, they're social. When they close these plants, I mean, they just close.
A lot of people they joke that BlackRock, mm-hmm. BlackRock is the fourth. They call it the fourth. The fourth system of government, or like, what is it? The fourth
estate?
No, it's like judicial, legislative,
the fourth branch of government.
Yeah, that's right. They call the fourth branch of government BlackRock.
Yeah. But eventually, I think there has to be a reverse of ownership at some point.
There has to be, yeah.
And some of these companies, I hate to say it, but some of them may get nationalized. If they ever get money out of politics and have a voting system, that's based on a blockchain, some of these companies may get nationalized. Because
some of them don't. Some of the things, it's okay if we determine some things to be mm-hmm. rights, and I think this is where a lot of people get uncomfortable. But if you brought up public libraries now, or mm-hmm. public schools now, or a lot of things, public water system, like if you bring up a lot of these things. Let's say they had never existed before, mm-hmm. and you brought them up now, a lot of people would be upset about the idea, right? They'd be like, people don't deserve that. Now they're things that people are really proud of, right? People love the idea that you have a public square and you have public libraries, and because
the people that get me are the ones that, I hate socialism.
Yeah, they live in the suburbs. They go to the public library. They send their kids to public school.
Right? Yeah. They get Social Security. Their parents get Social Security. They get vacation, which is a social program.
Right. They get weekends off.
5-day work week, which is a social program, socialism. And I think a lot of times, one of the things that a lot of capitalists have done is they demonize anything that benefits people.
Yeah.
They used to call it communist. I remember I was in school, it was like a communist. I'd rather be dead than red,
Right.
That sounds like a commie plot. That sounds like some commie stuff, And now it's the bad word is socialism,
Mm-hmm.
But yet and still, when they give companies, they have corporate socialism. Well, they never talk about that,
like the grants that we've just handed Elon Musk, right?
Yeah, I
And
mean,
so
yeah.
we've normalized a lot of things that people are proud of.
Mm-hmm.
We've normalized those things. People don't even think of those things as progressive
Mm-hmm.
ideas,
Mm-hmm.
right?
Right,
And
right.
it's okay for us as a society to progress more and say, we've learned that certain things are a conflict of interest if they're capitalism, right? Certain things are conflicts of interest if they have to worry more about profits and quality of life.
Mm-hmm.
Things like healthcare and things like that. Like,
Mm-hmm.
we have to be able to look at those and say, maybe it makes sense if that's something that people are given versus
Mm-hmm.
something that people have to pay for, because when you have to pay for it,
Like in most countries around the world,
right?
I had an artist I work with who she's in the UK. She had some throat issues.
Mm-hmm.
So I'd say, wow, man. I said, do you have insurance? So you can go see the ENT. She said, what do you mean? She said, I just pick up the phone and they call me back and I go. And like she was in to see an ENT in 2 weeks. I had a strep throat about a year ago. I said, well, I'd like to get an appointment to see my doctor. He said, well, you could see him in about 6 weeks. I mean, it's ridiculous. They always say that, nationalized medicine is slow in delivering care, but that's not what I've
It's a
seen.
lie. No, it's
Yeah, it's a
completely made
lie.
up.
Yeah, it's a lie.
Yeah.
Yeah.
You don't really have more choice at all. With the privatist stuff, you don't have more choice unless your choice is that you don't want it,
Mm-hmm.
which
Yeah.
doesn't help you. That's not choice, right?
Yeah.
And so, like, yeah. So at the end of the day, like, you have all these swirling forces. You have an economic system that's clearly dying. It's not doing well, and we have to keep slapping on band-aids to sustain it.
Mm-hmm.
And we have to figure out a way to reverse that flow of ownership.
Right.
And we have to figure out a way to re-standardize a new system. We need a system that isn't virtualized, that isn't fictitious, that isn't rehypothecated, right? We need a system that's liquid and real and that we all own. And so despite the market forces right now that we see that feel volatile and feel scary,
Mm-hmm.
it's because they're valued within a system that's dying, and it's not a reflection of what those things accomplish or what they offer us. The
Mm-hmm.
difference, though, is that you have to be careful of the things that, just like the dot-com boom, are there to take advantage of the excitement of the utility and they don't have the fundamentals, right? There's a lot of scam. There's a lot of people trying to
Oh, there's so
profit
many
off of
scams.
this
It's
stuff.
ridiculous, man. I mean, there's this one hyperverse. Anytime a finance company puts withdrawals on hold, that means you're probably never going to get your money.
Right.
I've never
Celsius.
heard of one putting withdrawals on hold and then it came off hold.
Right.
I said, well, there's a waiting period, and I mean, it's crazy, man. GOPX, is another one. Where this guy is, you have to wait 24 months to withdraw, and he's redoing the white paper. I mean, I never heard of that, man.
That's
Just
wild.
redo a white paper. I mean, come on.
The white paper doesn't. The white paper hopefully isn't how you carry out a withdrawal.
No. And he invests his money in centralized and decentralized exchanges. I always tell people, I said, the first thing you have to do is you have to buy a cold storage wallet. You have to get a ledger, and you have to buy it from the company. You have to buy a wallet to keep your money in. And if someone doesn't want to transfer on that, that's what I got. And if someone doesn't want to allow you to store your money in your wallet, then that's usually a red flag. That's usually a scam, and that's usually because there is no money, or there's fictitious money, like some of the progressives talk about. It's fictitious money. But I would tell most people, if you don't have a ledger wallet, get a ledger wallet from the company, because if you buy a wallet on Amazon, it could be a wallet that someone else had and loaded something onto it to steal your money, and they can say, I can get you a ledger wallet for $20. It's ready to go.
You've got it. You have to get it directly from the company.
Yeah, you have to get it.
That's true of a lot of there's a lot of flash drives, even on Amazon.
Mm-hmm.
A lot of flash drives is completely fraudulent. When you actually open them up, a lot of them lie about how much space is on them. They actually override the
Mm-hmm.
the memory allocation that it reports.
Mm-hmm.
So yeah, you have to be really careful
Well, the
about.
easiest way to hack a computer system is to go to the company and dump a bunch of flash drives on the ground in a box like they fill out a truck.
Yep. Yeah.
Everybody say, "Hey, we
We'll
got a
plug it in,
bunch
see
of
what's
these."
on this thing.
So as soon as they plug them in, and believe it or not, people, that still happens,
Yeah. But yeah,
So,
I think this is a great thing to end on, because
mhm,
having your own ledger, your own wallet,
mhm,
having one of these is a differentiator between you being stuck on Celsius right now versus you not being stuck.
mhm. Yeah, yeah.
um, because at the end of the
Real
day,
quick, tell them what happened with Celsius.
so Celsius claimed to be something for the unbanked, and the reality is that they're just a bank. Even though he even wore shirts that said like banks are bad, basically. I mean, but at the end of the day, they have two functions, right? They give loans, or you stake with them and they give you rewards. And the idea is that if you stake enough with them, then they have enough liquidity to offer loans, and they charge a high percentage on those loans. Let's say they charge 12% on a loan, then they give you 8%, 6 or 8%. Okay. Now that only works when a lot of people aren't withdrawing, and it only works when they have enough liquidity in the middle to fulfill all those orders, right? The problem is that if you end up in a situation where a lot of people are liquidating, all of a sudden you don't have enough to fulfill orders.
Yeah, yeah.
And in this case, they actually had $400 million staked on ETH2. The different right now, the problem is that probably not even for another year, you can't unstake because ETH2 isn't finalized yet. ETH2 isn't out yet. So they staked $400 million they can't touch now. And then they had another, they had a bunch of liquidation too. So they also have their cell token. This is how they were hoping to do this. They had their cell token, CL, that they would hope would continue to go up in value, and they would use that token as a way to supplement liquidity that they need to fulfill orders. The problem is that as the entire market tanked, the cell token itself tanked, news came out that they were going to pause orders, everything tanked, and then all of a sudden they didn't have liquidity in their own token because it had tanked. So now they're insolvent, right? This is a serious issue. And the reality is that you have two options. You either trust a centralized company to do DeFi for you. It's just a bank, right? Or you just use DeFi yourself, and you're in complete control of your own tokens. Now, if it's DeFi, but the contracts are bad, and this happens a lot, you have to be really careful even with DeFi, because a lot of DeFi protocols, the developers or the team will have some sort of backdoor that they'll be exiting with. And so you'll see these large transactions. Luna was technically,
who was that? There was somebody the other day that's skimming $80 million.
It came out now that Duquan, he was the guy behind Luna, he was moving large sums of money out of the liquidity pools.
I heard it was $80 million a pop.
Yeah, he was moving serious liquidity out himself because there was a back door. He was just moving it out of liquidity pools. So, you still have to be really careful. If something seems too good to be true, it probably is. If you've locked up your funds, and even in a DeFi protocol, even if it's decentralized, if somebody else has control over those pools and has some sort of function they can run to pull liquidity out for themselves, it's not, and so this is why it's just like the .com boom. You have to be super careful. There's a lot of scam artists. There's a lot of Ponzi schemes. And the moment and maybe those things work while things are good, but we're seeing that
always work. A Ponzi scheme always works when
it always works when things are good.
With hyper funds, you could invest 10 grand and you got an extra $50 a day. Which is pretty good. You invest 20 grand, you got an extra $100.
So don't put your life. This is the thing that I think we've reiterated before. If it's money you can't lose, don't put your life savings, because this happened to a lot of people. A lot of people had their life savings on Celsius.
Well, they took a lot of people that finding out now taking out second mortgages.
Yeah, you're trusting that one guy. Celsius didn't have their code open. You're trusting that one dude at Celsius to be like, I'm going to do the right thing with your money, right? Don't do that. When it's on here, you don't have to trust anybody else.
That's right. That's right.
When it's on your own wallet, you don't have to trust
Right.
anybody else.
You got your.
And so that's
It's like,
that's
hey,
all I'm saying.
give me your money, man. I'll keep it for you.
Yeah. Yeah, I'll decentralize it into my wallets.
Yeah, I'll keep it
Thank
for
you.
you. Just whenever you want it, just ask me for it.
Yeah, we're not regulated, so don't worry about it.
Yeah, don't worry about it, man. It's good. It's good, man. And it's a shame, because if you don't really, I always tell people the best thing you can do when hopping into the NFT space. NFTs were hot. They're not hot as they used to be. I mean, let's face it, man. Things are hot when they first come on the scene, and there's money flowing into them, and everyone wants to get a piece of action. But when everybody and their mother finds out about it, it's not hot anymore. Okay, it's cooled off. NFTs. People try to make a quick buck, and you don't make a quick buck. You make money by, putting it in Bitcoin and Ethereum and just letting it sit there.
Yeah.
And over the long run, you're going to make some money.
With NFTs, if you have an artist friend who's selling them or something, like I bought an album that was NFTs the other week. I have a friend who just released his actual one-of-one art pieces today as NFTs. You're not buying those as investments, right? You're buying those as
because you want to help the person out.
You like it. You like the album. You like art, right? Like exactly. That's really where where those are useful. Buying a picture of an ape that's one of 10,000. I mean, good luck. You know what I mean? Like,
how about what was it? The kitty? What was it? The Hello Kitty or what kitty was it?
It was Cool Cats.
Yeah, Cool Cats when they were selling these kitty digital photographs.
Oh, the original ones. You're talking about crypto kitties?
Yeah, crypto kitties.
Yeah.
That was, these little kitty cats.
Yeah, then you had punks. There's like the crypto punks that were pixelated. Those are still Yuga Labs, who owns Bored Ape, bought crypto punks. So now Yuga Labs is sort of a monopoly on like some of the largest blue chip projects. Is that like super decentralized anymore? You know what I mean? Like they're a company with VC funding.
People do it to make a quick buck. And I think, I don't know, man. I always felt like when something was a new idea and a fresh idea, that's when you made money.
Yeah.
But if everybody and their mother knows about it, oh yeah, I bought an NFT. If you go to the guy fixing your car and he's got NFTs, and the guy that cleans has NFTs, everybody probably knows about it, and it doesn't have the same value because there's not a demand for it. Like
not everybody can be a millionaire off of
everybody
NFTs.
Everybody can be a millionaire
if everybody knows about NFTs, right? That's
like the guy that bought in the metaverse bought his house next to Snoop. Well, last year when property was a lot was $1,000.
Yeah.
Maybe that was a good idea, but now they're what, 15, 16, 17 grand?
Yeah.
Yeah, so that may not be such a good deal, but I guess, if you can invest some money and make some money, maybe it is a good deal. But I always tell people, I said, the best thing you can do is to get educated, man. I said, man, if I had $1 for every hour I spent reading, I'd probably spend 3 to 4 hours a day.
Yeah.
Just researching and looking at different material. Because I like to understand it, man, and
right.
you have to really do a deep dive, man, and really understand, it's like, a lot of these funds, what was it before? Let's take a look at the white paper. KYC, know your customer. Why did the guy that had this get charged in Australia with fraud, and he's now in Dubai, pulling money out? I mean, if that's not a red flag, I don't know what is. And you really have to do your homework, because money is a precious commodity. If you want to just protect it and have no risk, buy some municipal bonds or buy some bonds, man, and just get your 2 or 3%. But you won't get rich that way. That's designed for people to have a lot of money that can survive, because if you got 100 million, well, 3%, that's 3 million, If you got 100 grand, you're not going to live on 3 grand a year.
Right.
So, I always tell people, you got to do your research, man. You got to read, you got to understand this stuff, because nobody can tell you, hey, give me 50 grand and I'll make you a millionaire. That's just, it's not going to happen, You know, and like you say, if your deal sounds too good to be true, it usually is. And I think most of the time when you research some of these companies and you research the people and you actually take the time to read the white paper, you can see it's all BS, man. You know, if Kim Kardashian's doing an ad for it, that's probably a
Like
red flag,
Mayweather,
man.
anyway, yeah. These, a lot of these celebrities, even companies, for them, it's just an exchanging of money, but
Yeah, yeah,
they
yeah.
don't care about the downstream effects on how
Mm-hmm.
it impacts your life or your
Mm-hmm.
savings, right? That's
Yeah,
not,
yeah.
I don't care about
Even
that.
got retired basketball players that, you know, recommending NFTs, and they couldn't half remember the freaking plays, and now they're NFT experts, you know. So
You got ones who think the earth is flat recommending NFTs.
yeah, yeah, the Earth is flat. Yeah, they said Earth is flat, but buy this NFT and you'll get rich. Yeah, man. So um, we're in an interesting time. You know, a lot of changes. Capitalism is having a crisis. You know, there was the crisis in 1970 when we couldn't pay. Everybody demanded gold for the dollars, and we didn't have the gold to cover it. So Nixon says, well, you know what? We're not on a gold standard anymore. The standard we're on is the good faith of the United States government that backs that money. It
Right.
happened in 71. And they said, well, how are people going to be able to afford things? And then right after that, they said, credit, man. I remember people, everybody in the family got credit cards from Bank America. You know, the kids, everybody. It's
Free
a
money.
credit. Yeah, yeah. It was free money, you know. And, and then move along to, the I guess the 80s, late 70s to 80s, when, interest rates were crazy. I mean, at a bank, you can get 12, 13% interest on your money, you know. But that didn't last too long, because what they would do is say, well, if you invest $100,000, by the time you're 55, you'll be a multimillionaire, if it stays at 12%, which we think it is. But of course it didn't, you know. That was another thing, and that was what, 1980. Then what was the next one? Was it 2000? The next big capitalism big problem was, well, the .com. Around
Yeah.
2000 was the
Yeah. Early
.com.
2000s. Yeah, you
You
had
know,
a .com.
and then the Enron guy. He's involved in something else now. What's his name? I forget. I saw his name on something else. He's the one that.
Oh, the one who predicted Enron, the
Yeah, one
guy,
who
the
predicted
short
Enron.
seller.
Yeah,
Yeah.
he predicted some other company. Now he's a short
Mhm.
seller. I don't know if it was Coinbase or somebody.
No, I think it was Netflix.
Netflix. That's who
I
it
think
was.
he
Yeah,
predicted Netflix.
yeah,
Yeah.
yeah. He predicted Netflix. So,
Yeah.
I think.
Still at it.
Yeah, yeah. He's still at it. Yeah, yeah. So, I think you got to pay attention, man. Everybody wants to be a multimillionaire. And if you want to be a multimillionaire and you're not 6'11" and can play basketball or football, you're born with no neck and you can play football. You can get there that way, or you can go to school and become a developer. A data scientist, or you can become a surgeon. I mean, there's a lot of other things. You can start a business. You can start a landscaping business. I met a guy the other day in the car wash from Estonia. He and his brother over here. He's got a landscaping business. He's got 912 customers.
Wow.
And all the big companies keep trying to buy it from him. And he says, no, he's got 912 customers. So, I mean, that's one way. There are ways you can get rich without a college degree or without being a professional basketball player. But buying NFTs is probably not one of them. You may make some money, you may not. It's a gamble, It's a gamble.
Like buying it's like buying a pack of Pokemon cards, right? You don't go into the store and buy a pack of Pokemon cards with the intention that it's going to change your life.
Mm-hmm.
It's mostly with the intention that you're going to get some cool cards that you like to look at,
Mm-hmm.
right?
Mm-hmm.
You might get one every once in a while. It might be worth a few bucks, right?
Yeah, yeah, yeah.
That's NFTs, right? If you're minting NFTs out of a collection of 8,000 or 10,000, good luck. I mean,
yeah, good luck. You're right.
The project itself has to go up. People have to care about their project. Most of them don't. And then the rarity of the one you got, or the few that you got, has to be in the top 10% of that, right?
Right. It's got to be rare.
So this is, statistically speaking, there's a lot of better places to put money if you want to make money. So.
Well, someone told me the other day, we were talking about digital art, and how it mirrors, you know, real art. I guess a Picasso just sold for 197 million, I think, yesterday. And I mean, is a Picasso worth 197 million dollars? I don't know. Could be. I know.
Yeah,
back
that's
in,
cultural economy, right? What is?
Yeah.
How much are things to people? How much were David Bowie bonds worth?
Yeah. I remember when I was in college, and we brought B.B. King to the school, you know, and he drank out of this liquor bottle, and this guy took it. It was like B.B. King's liquor bottle, and somebody
Right.
paid him $500 for it. And this was a long time ago, so $500
Right.
is a lot of money.
How much is toast that has Jesus?
He said, "This is
on it?"
B.B. King drank out of this liquor bottle." You know, I was like, so somebody was worth $400. You know, yeah, about the piece of toast with Jesus on it. I mean,
Right. How much? Yeah.
yeah. So you know, it's in art. One of the big secrets about art is a great way to store money and to launder money.
Right.
You know, was the Picasso really worth 197 million? Well, the 150 million that I made on my business, that I bought this Picasso for 197 million.
We could do a whole.
Well, actually,
episode on
I should get a
Yeah.
tax rebate. You know, I mean, we could do a whole show on that. But
Yeah, especially you got people with Bored Apes selling to themselves and buying from themselves.
yeah,
Right.
And see, art for a long time, people never understood this, man. But art, I mean, if you wanna launder some money, man, you know, if you're a drug dealer, a South American drug dealer, you want to launder a few $1 billion, man. Why do you think they all buy art, man?
Not financial advice, but
Yeah. Financial advice, but you know, and because a kid asked me, he said, "Why is people pay millions of dollars for art?" You know, it's a long story, man.
got a lot of ghost buyers in there.
Yeah, a lot of ghost buyers. Yeah, you know, and it's funny too, because you never hear the person's name that bought it.
Or you got some white lady in a pantsuit who's like,
yeah, but nobody knows who she is, and she's bidding for somebody else. Because the people that buy it, they don't go to the auctions. You know, they usually have a rep there,
yeah,
and a check. You know, for the art. So yeah, okay, man. Well, I think we covered a lot of bases today, and we appreciate you guys watching, giving us your time. We hope that maybe we've been able to, shed some light on some things you may have concerns about or maybe interested about. And again, our email address is show@thedeficollective.com. SHOW@theDEFI collective.com. Show@deficollective.com. And we cover subjects based on what we hear from you. So please let us know what you want to hear. And, we'll see if we can't do it justice. But, again, thank you for your time. Unfortunately, ours is up. So have a great week. Any closing thoughts, Alex?
Well, don't panic. Things are going to be okay.
Yeah,
what did Yellen say?
Man.
It's all transitory, right?
We go through this. We have capitalism has an economic catastrophe, every 10 years now. So, so they'll fix it. They'll pump some money in, and
don't worry, it's transitory. We're good.
Yeah. Matter of fact, if you were going to buy stock, you buy low and sell high. Well, it's a lot of stocks are pretty low now. It could go lower. I don't know. Bitcoin could go a little lower. Maybe this is the time to buy. Because I'll just say this in closing. With Bitcoin, you say, "Oh, everybody's selling. That's why it's so low." Well, no, 85% of the activity today was buying activity.
Volume was buying. Yeah.
Volume yesterday was buying. As soon as the people get everybody else to sell, when everybody else is selling, that's when you buy, when it goes low.
Yeah.
And I guarantee you tomorrow, the buying percentage will be up around 90. The buying volume, there'll be 9 people buying for one person that sells. And that's what drives the price up.
Yep.
So it may have bottomed out. I don't know. I'm no financial advisor, but that's the time. You buy low and sell high. You don't buy high. You don't buy it at $60,000 and then complain at 20 that you lost money. No. It was peaking. That's the time to sell it. So yeah, but we shall see. See you next week. Have a great week. Bye-bye.